Everybody, good morning. Let's see. We got Goose in the house. Lieutenant Colonel, good to see you. Don, Donald, Ivan, Dan, Arturo, Rob, Rex, Rosalind, Zoob, Larry, Gayton, Starstones. Don't recognize your name, but welcome to the stream. Francois, Gary, John, Carlene, Kevin, Eric, Don, Cliff, Ted, Sergio. Good to see you as always. Ryan, Indy, Brian, Frank, Diane, Laura. Good to see everybody. Good to see everybody. And welcome to the stream. Welcome to the stream. So if you want to chat with me, say hey, good morning. Like all these fine people, click the button over here. Be a subscriber on the channel. We have General Rush in the house. Roland, Mark, glad to see everybody. And welcome to the stream. Today at 5 p.m., I have 30 Minutes of Awesome. That is the request show that I do once a week. Lately, the attendance has been a little low, and I don't know. I need you to show up because, I mean, it's not a show without requests if it's a request show, right? Anyway, 5 p.m. Eastern, come see it. If you got time, I will do your chart request. And, yeah, so that's coming up 5 p.m. And today, I have a bonus trade at the end. Bonus trade. And I have... So we have a bonus trade coming up at the end. We have... did we find a bottom in the S&P? And 0-day options. We have a expanding range of 0-day options potentially coming to us. Wall Street Journal yesterday reporting that NVDA and Tesla may be the first ones to get 0 days. And those 0 days, when they happen, maybe not till late, the back half of 2025, late 2025. They've still got some stuff to work out, like what happens on earnings day. This is the big fear, I guess, at least according to the article, is that people play 0 days. They get automatically executed shares. Either your calls get automatically executed and you buy, and then 30 minutes later, earnings come out, and the stock drops like $20, and then you just lost $20 a share times 100 shares times however many options you had. Ugh. And brokers are afraid that people are going to get upset about that. And it sounds like to me they need to put in place better tools for do not execute these options. That's what it sounds like to me. You need to make it easier for people to say, hey, don't execute these options, or, you know, be able to tell them what to do with your options. So anyway, I guess that's the big concern, at least according to Wall Street Journal. Do you believe that's the big concern? Or do you think it's just like, how can we make more money out of people? I don't know. Let's keep it from happening for a little while. So actually it's the people pushing for it are the exchanges, the market makers, the hedge funds, and the people rallying against it are the brokers. I don't know. At least that was all according to the Wall Street Journal article. And yeah, I could, I guess, pull that up and show you. Let's see. One of these channels, I put in stuff about that. And let's see, where was it? There it was, Wall Street Journal. Probably keep me from logging in on this computer. But here you go. Boom and 0-day options coming in Tesla and NVIDIA right there. This was on the Wall Street Journal. If you're unfamiliar, here it is right here. And see it saying like Schwab, Tasty, Morgan Stanley have advocated for a cautious approach right there. And Robinhood included. While like Susquehanna International wanting it to happen. They want to bring it to single stocks, and the earliest they may come is late 25 right there. The earliest it might happen. So even though this was like, oh, big news yesterday, it might not happen for a year. So don't get too excited yet. And all the strategies I have, like Triple Threat Trader, will be adjusted to take advantage of that if and when it finally happens. Anyway. Glad to have everybody. Glad to have everybody. And it looks like more people have joined the stream. Welcome to the show. And let's go ahead and hit the thing right here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, fun and hopefully some entertaining. Hopefully I'm entertaining. Hopefully that's why you're here. I do appreciate everybody that, I appreciate the members of the channel that choose to support me even further. And hopefully I'm entertaining. Hopefully that's why you're here. Hopefully I'm going to help you make a little money maybe. Now remember, it's not a recommendation to be buying or selling any financial instruments though. No stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. I may never get another prediction right again. I may never get another trade right again. Although, Oracle, baby. Boom. Boom. And if you desire personal financial advice, you need somebody to tell you what to do. You need to hire and consult a financial advisor. That's the way this all crumbles right here in Oracle. Look at this baby. Look at this baby. Pre-market. Look at that. Oh, yeah. So my Apollo 30-minute time frame system kicked off. Throwing out a target right in here. And we got that bonus right there. Oh, yeah, baby. Oh, yeah. Beautiful. So it fired off right back here. Right in here. The target was a paltry 144. By the end of the day, we were looking a little gnarly. But then, kapow. Right there. I do have a $12 close order on, and we'll see what happens. That'd be like a 50% gain. And there you go. Some people are like, oh, traded into earnings. It was a calculated risk. And that one worked out. Could it have gone against me? Sure, it could have. But I made a calculated risk on that one based on the historic win rate and the profit factor and all the things that looked pretty spicy. Now, I did go out extra long. So for those of you that watched the trade, am I going to share the trade? No, it's in the Apollo VIP channel if you want to see it. And when I get closed, I'll post the close. It'll be after I'm done here. But that one was pretty darn spicy right there. Pretty spicy. Yeah, I had multiple analysis going on. So the daily chart, this is one of the big reasons I was willing to take a shot at it. That 30-minute fired off, we were already on the daily chart set for a pop, right? And look, the daily chart, the daily chart was set for that target right there. And look where we are, right at the top. Pachow. Beautiful. Almost can't plan on better than that. That was really nice. Real nice. So, yeah, his cousin Eddie said, that's real nice. Get yourself something that's real nice from Christmas vacation. Anyway, that was beautiful. So I do have another bonus trade coming up at the end. Stick around. We'll go through it. And S&P opened about 6 minutes. Inside candle yesterday. Inside the range. There's the range. Right there. We're not really confirming we're going higher till we're above here. So there you go. That's 55, 65 area right there. There's the range from Friday. We stayed in this little bubble right here. As Romer said, we still have it's like a 90% odds we'll touch a lower low than we did Friday. 90% odds, but still that 10% hanging out there that we may just whoop go up. So don't playing high probability stuff, but you have to remember there's always that time. It can rip you the other way. So be careful. I mean, you can change anything you want. I am unable to make trading changes right now, and while I'm live, because this is not a trading computer. This is a broadcast computer. I don't trade from this desk at all. even though it may seem like I do. This is all set up like there's lights, there's cameras, there's screens, I mean, it's a little studio room I have, and I I don't really trade from here. I can load a platform, but I don't have all my notes. I don't have all my things that I usually sit here and trade with. So I don't make trades from this computer. So those of you that want me to place live trades, it's probably not happening from here. That's just not the way I'm set up. This is set up as entertainment, not as that's what YouTube is. YouTube is entertainment. So while I do a live update and I'm very serious about it, I don't actually trade from here. I go heads down and focus at I actually have a desk. And funny story, when I got started, the first few broadcasts I did when I got back to Knoxville after I launched Echo Trades, I did it from my desk, and my manager, the brand manager, was like, do not ever show your desk again. Like, that is so messy and sloppy. And I mean, I don't know. Y'all care if my desk is sloppy? I mean, I don't know. I've got a few things sitting on this desk, props and stuff. I got my bag of unicorn dust sitting right here. I've got my little Johnny 5 robot sits here. Oh, he's gonna slouch over. A little Johnny 5 robot right there. Go the right way. Oh no, his laser fell off. And I've got my bulldozer I've been working on, my Lego bulldozer sitting over here. So I got a few things sitting on this desk. I got a bag of gold dust, or pay dirt, and I got my monster, of course. So, but my other desk, I got my 3D printers there. I've got my all sorts of stuff. So, but that's my trading desk. I sit there and I have my notes. I got notes everywhere. I got like 7 screens or 8 screens. So, right here I just have 3, 4. Well, if you count the Stream Deck, which is the thing I push to make all the scenes change, I got something like 60 screens staring at me right now. It's got a ton of little baby screens on it, and that's the way the cookie crumbles. So there's the sausage being made, if you will. Anyway, S5TW rallying up yesterday a little bit, but not really moving much. That stock's above the 20-day. Not a lot happening. Still in it, inside day, just like the S&P. S5FI, inside day, just like the S&P, and S5TH, inside day, just like the S&P. Imagine that. Imagine that. All the things based on the S&P are all matching the S&P. ES, overnight, pushing higher. Tomorrow, remember, tomorrow, big day, tomorrow. Dun, 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 we have CPI. This can be a big market mover. This is going to be one of the last major news drops before FOMC next week. Right here, we have there's PPI the next day. Yeah, PPI doesn't tend to move. Like, this doesn't tend to move on the chart, and it doesn't tend to move the market. Doesn't tend to. Now it can, but look back here in the history. Usually 0.2, 0.2, 0.2, 0.2, 0.1, 0.1, 0.1, 0.1, 0.2, 0.2, 0.2, 0.2, 0.1, 0.1, 0.1. It's either 0.1 or 0.2 usually. Now when we get something a little spicier, that's when we got inflation rocking, and it's going to trickle into the real market. And that's kind of the way it all works. So there's nothing on Friday. We get those back to back tomorrow and Thursday. And then next week, we get that FOMC meeting coming up. So we do have retail sales, but they won't take into consideration this because the meeting will already be started, essentially. They start the meeting on Tuesday. They wrap it up on Wednesday, right here. So they won't adjust anything because of those retail sales numbers. That's too close. So while that may cause a little volatility in the markets, it's unlikely to have much effect compared to this right here. This is the big show right there. And you may want to have a little protection in place just in case they only cut a 1/4 point and the market gets really bummed out about it. That is possible. So right now, 0.25% cut is projected. Lots of the market participants think it should be a 0.5% cut. And even if the market does a 0.5 and gets super happy, as Sergio pointed out, that's eerily similar to 2007. 2007, the market went like that. We did the first cut. Everybody got super excited. And this is we're even on the timeline for that. Let's go look at that really quickly. Let's go talk about this. Let's talk about history. We don't usually dive that far back, but let's see. Let's go back in a time long, long ago. A land far, far away. There's Oracle firing off the exit. And let's see, 2012, almost there. 2008. Yeah, really right there. So what we had, let's see, let me get when the, oh, come on now. Really? Really? Where's my DGS2? What the fudge? What the fudge? That's not even the right one. What the heck happened here? What even happened here? All my tabs are messed up. What the nuts? Anyway, all right. This is set to simple chart. Interest rate. What the heck even happened here? Set to black. What the heck? What the heck? Not even sure what's going on here. All right. Roll back over here. So if you didn't know, DGS2, this is the 2-year constant maturity rate. So right there, we cut June 07. Well, I guess it was August right there when we actually did it. Or maybe, I don't know, June to August right there. That is the cut. First cut right there. That June to August time frame. So zoom her up, Buttercup. Right there. We were coming into June, July. Dip into August. Yeah, there's the rate cut. Dipped and ripped. New high. Right there. Then what happened? Uh-oh. The wheels came off. We got this. Did the 618 retrace. This is why I'm very focused on these 618 retraces, especially after drops. Look, right here. 1, 2, 2. Right there. And then that was an A wave. That's the B wave. And this was the C wave. C waves have 1, 2, 3, 4, 5. C wave right there. Fast move in the middle. 3 of 3. Look how fast that was. That's what I'm always looking for. That's the piece I want to catch right there. Catch it on the upside, catch it on the downside. So that's why I'm always looking for those 618 retraces that hold and watch out. That's also why the daily roadmap line is so important to me. If we get below it, back test it from the bottom, Yikes. So, anyway. Eerily similar right now. Eerily similar. Time frame a little different. We're running just a month behind. We're in September instead of August. Could rally up, hit that new high, and watch out. That's why I'm very concerned about what we have cooking right now. Already had the shot across the bow, coming up. If we get this pop right up into that higher high, that can be it. That could be the last move we have right here as we cut rates into the abyss. Maybe like, well, everything's good, JT. Yeah, the government numbers are good, but awesome, Patrick. Awesome. 1570. Hopefully mine got that fill. I didn't pay attention to what my fill was. Didn't hear it. Let's see if it says Oracle fill received. I got it on my phone. Let's see. I got 1480. Good job, Patrick. Good job, Sledge. And got everybody. All right. Awesome. 1635. Dang. Or is that your profit? 1635. Awesome job, everybody. Awesome job. 1580, 1590. Everybody beating me. Great work. Great work. Love it. And it makes me proud to see how, now, when the market's doing, honestly, when the market's doing this, I'm suffering, you're suffering, we're all suffering, and it sucks. People get mean, too. When we're doing this, people get mean. They come they blame me for losing money. I'm sorry. I try to warn you. I try to be permacautious, and that's, some people get upset that I'm always, be careful, be careful, be careful. But, when this happens, which it invariably will, especially after a record rip in the market, we're going to be down. We're all going to be down. I'm going to be down. You're going to be down. We're all going to be down. All right? It's going to suck. I know. You got to control your appetite for risk, though. If you were max risk here, it's really going to hurt. All right? You always got to keep it in check here. All right? Always got to keep it in check. You can't be max risk at the top. Now, when we're down here and everything's beat down, I don't even recommend going max risk here, but I do recommend maybe when things are, set up really nice, that you maybe push a little more chips, especially when it starts working for you, because you can ride a mega rally here. It's when we bottomed here, last month, I pushed more into lots of stuff. I cashed a bunch of it out here. That's a risky spot. Haven't really done much else. Taking a few pot shots here and there on a few things. Kind of expected another retrace. We've got it. Now, if we can break out higher, game on. If we break down, game on for going lower. It's very, very, you've got to be very fluid. All right, this is not a perma bear, perma bull situation. This is a take what the market gives you situation. Up to 70, maybe 80% of the time, the market's just going to chop sideways and just chop everybody up. That's what it does. As Goose commonly says, there's only 10 days that are big market mover up days that can make a big difference in your account. Thought yesterday might have been one. Turned out it wasn't. Might be tomorrow. Might be on the CPI. And then next week on the FOMC. That might be the way the cookie crumbles. Of course, we could drop on the CPI tomorrow and then pop on the FOMC next week. We could drop down, come on down a little bit lower, part around here, and then pop on the FOMC next week, right up here. That could be the way the cookie crumbles. I don't know for sure. All right. I have my bag of unicorn dust. I don't have a crystal ball. I'm not magic at this. I just know how to read the high probability patterns. A lot of times there's not. All right. Right now we're sitting right in the middle of two high probability patterns, one for a drop and one for a pop. The drop is much bigger than the potential pop. If you really want to cover yourself, consider a 5100 SPX long and maybe something down here around 4500 short, or even 4300 or even 4200 or 4100. If you really want to cover it all, you need another one of those, maybe a 44 long and a 35 short. And how long? Well, gosh, you should be out to January at least, if not March. Could you play that in SPY? Absolutely. Could you play it in XSP? Absolutely. There's lots of options, if you will, for how to protect yourself in this. Depends on how much money you want to put to cover the potential down. Now, are those going to suffer if we do the pop? Absolutely. Could you get a better deal on them if we pop? Absolutely. Those are hedge trades. It's insurance against a big down in the market. Those are not trades that you're expecting to work out. You actually hope your insurance, like how many people out there pay your car insurance every month and hope you get to claim it? I mean, no, you hope your car is fine and you don't get any wrecks or anything. I mean, how many people pay your home insurance every month or every 6 months, and then you hope your house burns down so you get to collect the insurance? No, that's not the way it works. So if you put insurance on one of these insurance bets, you kind of hope that it doesn't pay out. All right? That's why you don't put like a large position on here. Now, if it starts paying out, that's when you attack it and, leverage it up. And that's what I did during COVID. I had some small positions on. Those small positions became very profitable. I closed them on an up day, or, closed them on a down day. And then on the next up day, which we got several during COVID. We'll have to go back here again, take a trip back in history here. It doesn't seem like we got up days during COVID. See, we got this initial down, then we got an up. I added back, then we got more down. I closed, and we got another up. Added back, then we got another down. I closed, then we got another up. I added back. We got another That's how I was in and out very quickly. And every day was like running a freaking marathon. There were days in here, the biggest, it may have been that drop right in the middle there. That drop right there, I was up like $856,000 in one day. And I gave a little back because I only closed some stuff. I didn't close everything. Gave a little back. Easy come, easy go. Watched like 300,000 of it go away the next day. Added back. And then closed out almost everything here, at least volatility wise. Still rode some of the other stuff. I still had some other shorts, and I did give a little back by the time this started happening here. And when we broke higher here, it was like game over. Like we're not going down again, probably. And then it was time to ride up. And then we did this crazy up where we didn't get any pullbacks, which was a little crazy. I launched echo trades right here into this where we didn't get any more pullbacks. That got frustrating. I know it did for a lot of people. But we did have a nice big up. And then we took a nice big correction. After that big up, we did that. Found a bottom. And now we're in the current situation here. But this looks like it's topping out. So be careful. All right. Awesome. Done. Awesome. 100% profit overnight. Awesome. I love to see that kind of stuff. Screenshot that, baby. Awesome. All right. I feel like I'm all over the place today, ranting. Sorry. Apologize for those of you that are just here for the market analysis. It's time to be careful what you're doing. Now, the NQ, which is the NASDAQ, If you're unfamiliar with these are the futures. I watch the futures because they trade overnight, give you more information. The futures for NASDAQ and for Russell have the best setup that I watch. All right. Now, it's not the most high probability setup I watch. It is the best setup I watch for moving in a big way. Remember how I was just talking about that big down, a 5-way down? This has the setup right here. We have the 1, 2. We have the setup right here. 618, measured bounce, and roadmap line bounce, both coming into play right here. The potential up is right up here. And it could even go up to here. This can do an explosive move. This setup is in place. Now, if we go down and break below this level, down around 18,000 on NQ, it's kind of messes it up. So I want to see this turn and burn right now. Like, we could mess around for a couple weeks, but I don't want to see it break down further. That'll mess up this pattern. Same for the Russell. Got it in place. Want to see this take off. I don't want to see it break down and go lower. That messes up the pattern. The lower we go, especially if we make a lower low, well, absolutely. If we make a lower low on either of these two charts, the pattern is done. Like, it's game over. Like, we're not getting an explosive move higher. So that's the point to watch on both of these. Below that 1990 chart, 1990 price on this chart, say the words in the right order, and below this low right down here at 17,360-ish on NQ. ES is a little different. We didn't go that deep. So these two have the explosive setup. Oh, look at that. Dang. That thing popped right up to the target. I did not expect Nally to do that one. So that's what to watch on those two. If we break down, the explosive pattern's messed up. Oh, look at that. Look at that. We touched. I didn't even, when I was looking at this on yesterday, I didn't even notice the tag. Basically, that was tagging the target that I expected right there at 67. Came up just a couple pennies shy, but that, if this starts ripping, so here's, set an alert right in here. If we break it back above this area right here at 72, 73, if we get back up through here, that's the major resistance right there. Why? Because here's these tails and here's these candle lows right there. We break up through that, we're going up, probably in a big way. So watch for this to come right back up here, get through here, and continue up higher. That's the what to watch on oil. Gold, still sitting in the box. Not doing anything awesome. Oh, great work, Dawn. Crushing it. I got Dawn and Dawn crushing it on Oracle. Awesome job. All right. Man, y'all are rocking and rolling, man. I just had one. I'm still in a low margin situation. They really messed me up on that. Like, I understand how painful this was because I got force closed right here on a trade that would have been massively profitable at this point. They force closed me. They closed it without even checking with me. They closed it right there. Pre-market even. Put me in a margin call situation. And I haven't been able to recover. Like, not really. I understand. It kind of limited me to be able to trade for the last month. Like, I've had to be very, very picky about my trades. Because I don't have, like, it ate all my cash reserve right now. And I think they're playing with my margin percent because of that. And they won't. I think they turned down my leverage on my account because I just don't have free cash to trade with. I need this to pop so I can close a bunch of stuff and fix some stuff. But right now, that hurt. Believe me, I know it hurt. Like, for those of you that ate a bunch of losses, I understand. Like, I ate one and I had no choice in it. And it screwed up a bunch of stuff in my account. I had to liquidate a bunch of positions that I was going to hold. It messed up a whole bunch of plans. Like, I understand. And there's not much, sometimes there's not much you can do about it. And anyway, I'm stuck. I mean, I'm trying to work my way back out of it, and it does suck. I can't share everything because, you know, some of the stuff I did, it's I'm not supposed to talk about. It's futures trades, really, is what got me in trouble. So futures trades are what got me in trouble, and they were options trades on futures. I'm not supposed to talk about trading futures because it's a whole different regulation. So I don't share that disclaimer, so I don't share those trades very much. I do share a little bit with Termite Trading Lab. If you're interested, that's the VIP group I have, that all access, get access to everything. It is expensive. It is 5 figures to join that group. My family, you know, people like Jody and Dawn and Kathy and Sledge and Rongamer and Lieutenant Colonel Goose and General Rush and Laura and Nikki. All those people are in the VIP group. That's why I talk to them all the time. I talk to them all day. You wonder why Discord's kind of quiet. I'm usually talking to the VIP people when I'm talking, because, well, they're my active traders and they understand a deeper level of what I'm doing. Right here on YouTube, I can only share so much. I've only got so much interaction. My VIP group has had several in-person events, and we go much deeper into what I'm watching. So when I say certain things, they understand what I'm talking about. And if they don't, they ask me in the chat and we talk about it further. So, and then we have monthly roundtable meetups on Zoom and talk about this stuff even more. So, and we have very technical conversations about what's going on. So if that's something that interests you, call my team and we'll get you hooked up. It's like 321-888-3962. Press the number 1. Ask about Termite Trading Lab, all access. They'll hook you up. So anyway, Oracle, look at that baby. Right up to the extension target. I don't know if we'll get any more like that. That might be it. If you're expecting more, I would probably bring down your expectation a little bit. Lock in profit, set your stop. It's not being wrong that costs you money. Stand wrong. If we get below there, we may come all the way back down to here. All right. Let's keep the expectations in check. That was a massive move from here at 126 all the way up here to 160. Massive move. A lot of people say this is the underdog AI play. I think AI plays are getting to be played out. I mean, look, this frequently returns to the roadmap line. All right. Frequently. After a pop, it frequently, even there, right there, look, gap up, hover, and right back down. Gap up, we could hover and come right back down. If you're expecting a large pop from here, let's bring those expectations back down a little bit. All right, that's not the way Oracle moves. At least not the last year and a half. FNGU, sitting on the roadmap line. Breakout above here and support down here. Resistance here. If we get through it, targets up here. If we break down, support's down here. That's the long and the short of it. SMCI. Oh, getting down here. I do expect one more nice flush at the minimum. Back down to this 200 to 300 area. That's what I expect. We'll see what happens. Tesla. Looky. Oh, moving the long-term trend line. Looky. We can break above. Probably setting it up. And we have another resistance right up there. We got to break that area right there. but it looks pretty good to doing that. If we break above here, watch out. Watch out. I wouldn't bet against it. I am long Tesla with shares. I am long Tesla with TSLA shares. I'm not long with any options. That's one position I held on to. I did not liquidate that position. All right. JPM. That looks played out. While it could go higher, 234, that looks played out. It may come back to the roadmap line or the vicinity of the roadmap line. We did the bounce right there up to the target. Watch for that to roll back down. JCI, just kind of hovering here. Doesn't look like it's able to. Looks like we've expanded this consolidation just a little bit. Having a lot of trouble breaking out of the zone. May result in a return back to the lows. At least 1, 2, 3, 4. Has a potential 5 up. It looks like it might need to retrace to the middle of the box. Find support and then go higher. This reminds me of this chart right here. Right back over here. Rallied up, retrace to the middle, ching ching, and busting out. Silver. I'm expecting silver to get a rocking and rolling. I kind of skipped Bitcoin and everything. I can circle back. BTC, USD. Bitcoin, I see 3 green candles. I see 3 green candles. Now, do we get the continuation? Or is it going to fail us? That's the question in my mind right now. Now we can mess around for a day or two. Typically we get 1 to 3 weeks continuation. I usually say 2 weeks on average, because that's the average of between 1 week and 3 weeks. So watch for this continuation. Right now, we just have to wait. There's nothing to do. You could add a little risk maybe if you like this pattern, but remember, it can fail. They can all fail. Bitcoin looking a little spicier, but we're still below the roadmap line on both. That can still end up with a lower low. This could be just a fake out. Could just be a fake out. See what happened right here. 1, 2, 3 green days. Rest for a couple days and then continuation higher. Right up there for another couple weeks. And 3 green days, rest a couple days, push on up. That one didn't last long. I mean, that one didn't last as long as it looked like it might. So, be careful out there. Permacautious. All right. Dollar rising puts pressure on commodities. If you believe that stuff, I think it kind of trades a little bit independent here. We're still hovering here. Here's support. Here's resistance. Hanging out right here. I do still expect this to go lower. The mid-90s is still where I expect it to end up. And it may take another year, 2 years to get down there. And it could go down in a bigger way. If we get down there and don't find support, we could go down much further. I mean, look at the history. Like, we hung out down here in the 90s for like almost a decade, and it seemed like at least quite a few years. And before that, we were hanging out down here in the 70s. It's been a long time since we were up here in the hundreds. When the dot-com bust, if we're about to have an AI bust, that might happen. The parallels here. When was the last time we were up in this area? In the hundreds? Dot-com bust. What do we got right now? AI bubble potentially. AI bubble bust. Could end up down here. Just saying. Lots of parallels. Lots of parallels. How are we looking compared to 2007? That was just a hiccup on the way down. A spike, lower, and then we plummeted out. That market high, and we were already on the way down. Look, this is eerily similar. The dollar is even eerily similar to 2007 here, where we did that spike, started drifting down, get some consolidation in here. 2007, that market high, that rate cut happened in here in August, and then go back over to the current. We had that high, we've been messing around, potentially breaking lower, we get that rate cut, and potential to go down. Be careful out there. Japanese futures, still messing around here. I'd like to see this quit being inside this big drop over here. There's the resistance and support, a little bit lower down, 29, 30,000. All right, moving on. VRDN, that's a pharmaceutical, not my favorite thing to trade. It does have a potential setup in place. Gonna have to get a close above that 1635 for 19, possibly 22. But pharmaceuticals, biotechs don't always follow the patterns. I just kind of don't trade them most of the time, unless it's a really good setup, like Eli Lilly, LLY. And Amazon, if this can break above the gap fill, set up for 209. BAB, BAB. This was on the poppers. Now it's not on anything. Looks like it may retrace. Taxable municipal bonds. SMX. That's a dumpster fire. Man, oh man. That's a dumpster fire right there. Be careful on these. Be careful on these. And they've dropped in the abyss and they have a reverse split and still on the downtrend. Be careful. Stuff is declining. IONS. That's pharmaceutical. No entry. Cold. KOLD. This looks like it's going to pop. This is ultra short natural gas. So is natural gas going to fail, or is it going to pop, break out, and go higher? If this goes higher, cold is going to go down. That's the long and the short of it. Alley, financial. Ooh, baby. Ooh, baby. Let's see. That high, that low, that high. Right down to extensions. This could be a bottom. Could very well be a bottom in the current. Let's just remove all the stuff before. And 1, 2, 3, 4. Yep. Hold here, go higher. The next move might be right to this area right here. If we're going to do it. If we break down below this low, or this high, excuse me, if the current low goes below this high right there, that line, game like likely to go lower. The problem here, this high, this low, there's that resistance zone. If we break down below that line that I just drew right here, here's the downside target. That's the long and the short of it. You know, limited upside, potentially bigger downside. That would be the 1, 2, 3, 4, 5 up, retrace back to this area once again before we can break out. So even if we do this, we may do this before we can do that. Or if we break down below this, watch out. step. That looks to be played out for now. That's the same pattern. I was just basically the exact same pattern I was just talking about on Alley. That one worked out. This should retrace back down to this area. I mean, it could get continuation, but I would expect a retrace back down here in this zone before we get the final move. That final move, potentially something right up here. Off of that. NVO. Still looking like we want to retrace deeper. If we can hold the roadmap line, break back above the gap down, 153, 157. Caution. This one looks like it wants to do a deeper retrace. Lily holding up really well in comparison. Hasn't broken out. Look at that. 1, 2, 3, 4. 4 tries to get out to higher highs. I'm holding a few shares, expecting that to pop up into this zone right up here at the target. 10 right up here in that zone. I guess I can draw an oval target right there. I don't even have an alert. That's riding dangerous. Right there. AU. That's going to be the wrong AU. Should be the New York Stock Exchange AU. Shante Gold. That looks like it's coming down to the roadmap line. NEM is my play. Don't like most of the other gold miner charts. Then RBRK, rubric. Look at that choppiness. Nothing. And my bonus trade is Churchill Downs. This is a smoking hot trade. If you thought XLY was good, check this out right here. Like, it fired off right there. That's the entry. Here's the target, 149, right up here. This is the entry today, right there. Stop down here, below the low. And coming up, coming in hot. The statistics for this baby. Let me just do this so I can draw on it. So we have new potential entry, target 149.24, stop 127.66. Those are the hard numbers. Profit potential $9, 94.44% with a profit factor of 21. Typically lasts a long time though, 111 days. You might type your money for like 6-9 months. 18 trades since 1993. That's a little light, but look at that win rate. That is insane right there. So this may drift this way for quite a while before we get there. 111 days on average. Could we go faster? Absolutely. Could it go slower? Absolutely. And here's day one today. 111 trading days. Takes us out a while. Takes us out a while, right? There is the average. That is February. Could it be twice as long? Absolutely. Could it be shorter? Absolutely. There you go. That's the bonus trade for today. Let me know in the chat if you like it. Certainly let me know if you take it and you do something. Maybe a while you may have to remind me of when we talked about it back here on September 10th. But there you go. That's Churchill Downs. That's a pretty sweet high probability trade. May take a while to play out. 6 months. So, all right. Like I said, let me know in the chat or leave a comment down below if you love these bonus trades and bias for the day. That's what everybody really wants to know, right? What do we expect to happen for the day on top of bonus trades? Still the same thing yesterday. We need, here's the range. Here's the range. Got to break above this 55-65 area to confirm we're going higher. We're in this intermediate, even tighter range here. This candle from Friday. Get above that, we're probably going up to test that. If we can get above that, we're going to new highs more than likely. Like, it becomes like probably 90% odds we're going to new highs. If we get below here, we're coming down to here. Right there. We get below the lows of Friday. The red box that's been there since before we even got back up here. We're coming back down to the roadmap line, right back down over here around 52. And if we don't hold that, we're going on down. So below 5,300 makes it look highly like that tips the odds we're going on down. I have bias for going up. The statistics say we're probably going up, but I'm just a guy that gets stuff right. I'm not necessarily the king of telling the market what to do. I can't like push the buttons and make the market do what I want it to do. I can just make my best guess based on the statistics of the past. Hope you have a great day. Remember, 5 p.m. I'll be back live, and